All right, let's go. Welcome to another ShareWise webinar. I'm Wei, and I'm heading up the research effort for ShareWise here. Today we have Joseph Oliver, who's the managing director and co-founder of Delorean Corporation. I might get you, Joe, to give a bit of a brief introduction of yourself first, and then go into the presentation, if you don't mind. Thanks.
Yeah, thanks, Wade. Thanks for the intro. Yeah, so I'm Joseph Oliver. I'm the managing director and co-founder of Delorean Corporation. Today, I'm going to just step through a few slides on what we do as a business, but more importantly, where we're heading basically as a business as well. So, Wade, if you're happy for me to dive into the slides and go from there.
Yes, please. Go for it, Joe.
So firstly, just to set the scene, look, Australia cannot reach a net zero target without renewable gas. So we've heard a lot about electrification, but biomethane, is the commercially ready now, and Delorean is scaling up biomethane nationally. I think we've seen a lot of projects around hydrogen and a lot of electrification. And we're supporting that large industrial, hard to abate sector decarbonize. So that's our focus as a business. So firstly, just what do we do? So bioenergy, anaerobic digestion, it's not new. It's a mature technology. It's deployed tens, if not hundreds of thousands of facilities worldwide. And we're effectively delivering it under the Australian context and delivering a commercially viable solution that meets the requirements. So Delorean, we've been listed for the past 5 years. We started back in 2013. We've got a track record. We're listed on the back of a profitable history, and our focus is about transitioning, building out a national infrastructure that diverts organic waste from landfill through anaerobic digestion, mature technology, into byproducts such as nutrients, so capturing the nutrients in the form of digestate, biomethane, so upgrading to renewable natural gas, and also capturing the biogenic CO2, so liquefying that CO2 as well. So that's the focus. We've got three divisions across our business, from engineering, infrastructure, and energy retail. And in our engineering division, we've deployed multiple facilities for third parties, and we're utilizing those lessons learned into our own infrastructure as we roll out a build, own, operate pipeline that I'm going to talk about shortly. So why is this relevant? Well, look, so Delorean has, over the past 12 years, built multiple facilities processing different types of organic waste. So our focus is organic waste. Effectively, digestion is doing what your stomach's doing. It's the breakdown of volatile fatty acids, so food waste, into energy in the form of methane or biogas, and then nutrients as in NPK. So we've processed everything from commercial industrial organic waste, so food and beverage waste streams, parts that KFC and other users don't want. We're able to process that material in large volumes through our digestion system, including agricultural waste, so ag residues, material that again is not used. We can find a value for from an energy perspective. And now what we're seeing is municipal waste as well. So more of that FOGO stream, so that food organics, garden organics, in addition. So we built multiple facilities, including, award-winning facilities, including the recent Yarra Valley Water project for a tier one. And now we're well advanced in our Salisbury project with the latest announcements of the New South Wales project. So our opportunity and focus is bioenergy is untapped here in Australia. And when we look at the plants that we build, there's over 1,500 commercial scale. This is industrial anaerobic digestion facilities, so similar to the ones that we've built. And in Australia, there's only six. So we've built four of those, and we're into the build of five and soon to be six as well. So we're seeing huge appetite for natural gas. There's over 1.1 million TJs per annum of gas consumed. So for us to be able to support that, the market for us is massive. So 400,000 TJs, which is 400 petajoules. When we look at our South Australian projects, that's delivering about zero point 0.2 of a petajoule. So the opportunity is massive on the gas side. Equally, the focus for us is we're seeing a lot of policy pressure. So, this drive to decarbonize, we're seeing a lot in the industrial sector around net zero. So, safeguard mechanisms, future gas strategies. That New South Wales government has brought in a renewable fuel strategy and a fuel scheme that really supports and underpins the growth. In addition, we're seeing mandatory rollouts of the third bin FOGO being captured. And when we look at that, when we put that all together, the support from the likes of federal and state, as per our recent announcements in our projects such as South Australia 1, as well as the New South Wales project, in addition to large bank support, so from the likes of NAB, it's really supporting the pathway for us to roll out a national pipeline of infrastructure that delivers annuity-based revenue and commercial returns. So today, look, Delorean's got a pipeline of well over $200 million that we've been developing over the years. We're in build with our South Australian project, and we've just announced a New South Wales project. We've secured in South Australia over $55 million of long-term, 10-year, high creditworthy counterparts in contracts that is enabling high returns on our projects. In addition, we've secured over $42 million worth of grants to date that have been successfully awarded to Delorean to deploy in our infrastructure. So this is reducing our equity requirements and also supporting the debt facilities that we've been able to put in place to support this 25-year plus long-term annuity-based infrastructure that we're rolling out. We've obviously built multiple facilities. We're running a very strict ISO process here, and we've got over 70,000 man hours of no lost time incidents on site. So we're heavily focused on that, and our partnerships to support that waste diversion, to support that reduction of fossil fuel is key for us. So it hits high on the ESG reporting. Nationally, when we look at it, state by state, there's a lot of different metrics that support the focus. Volume of waste through to gate fees, state by state is different, and biomethane appetite. So we've rolled through nationally across pretty much every state now a development through into construction, and our focus is a national rollout of multiple facilities by 2028 and on to 2029, 2030, and into 2040. So we've got a high focus on what our pipeline is, and we're very much underway with that. So just from a revenue perspective, our projects are yielding as an unlevered IRR north of 15% plus. And that's mainly contributed by the fact that we get paid for our fuel. So we're able to process organic waste that is diverted from landfill that generates both carbon credits, but also gate fees. We're able to utilize that gate fee to get paid for our fuel. And then on the output, we're getting gas offtake, liquefied CO2, and also biofertilizer. Now, different states is different. The New South Wales project has got a slightly different pie chart, if you like, around where the revenue streams are affected. So higher gate fees would give a higher return on the feedstock coming in. We've also got other byproducts that we can create value from. So biofertilizer, a lot of our cases, just even in the 15-20% IRRs that we're seeing, are factoring in at zero. We see that to be a major revenue stream for the business moving forward as the infrastructure gets built. So focusing on the South Australian project that we're well underway with, we've got a lot of the infrastructure in. Long lead items have been delivered to site. We've got a lot of partnerships that we've been able to support, from the 10-year offtake with Origin and Supergas for the biomethane and liquefied CO2, which has underpinned the NAB facility and others around how we fund these projects moving forward, so that we're reducing the equity requirements and supporting that position. In addition, this was subject to a $6.1 million ARENA grant, and we're pushing for first waste in the July, August timeframe, where we'll start taking in product destruction waste through into liquids, solids. And then as we start to ramp the process up, we're expecting first gas in that back end of October, November timeframe. So we have seen a couple of months slippage, and that's mainly due to the summer period, with the long lead items falling on site just after that. The team's extremely committed to getting the facility built, and we're very much about 70% through. And at the right time, we'll welcome shareholders to come and have a look through our facility as a facility tour. This facility processing 70,000 tons of organic waste to produce just over 180 TJs that will be injected back into the grid, into AGIG's grid, and it'll be the first of its kind in South Australia, and the first of its kind in Australia, where we're actually processing commercial and industrial organic waste streams for renewable gas. So, an exciting project. The recent one that we've just announced is the New South Wales project, supporting Brickworks behind the meter to decarbonise with green gas from the facility. So last year we achieved the development approval. We've been working with Brickworks to find the best contracting solution. We've secured just over $30 million of grants, and we're just stepping through the equity and debt position to reduce that equity position as we move forward. This facility, large facility, so 120,000 tons of waste. We know there's over 1.6 million tons of organic waste within the area. So ability to fill that facility up, displace fossil fuel behind the meter, divert organics from landfill, and reduce Brickworks' Scope 1 emissions on site by 38%, but from natural gas about 50.5%. Long-term lease on that site, so 25 years, and a long-term offtake as well that really supports that position moving forward. In addition, we've got a pipeline. So we're advanced with the Vic-1 project that's focused around renewable natural gas now, and we aim to be updating the market in due course around that facility, and some wins that we've had there. In addition to the Queensland project that we've been working on, that had secured a $5 million grant. We've also opened up a relationship with Opal, so similar to Brickworks, where we're supporting large industrials decarbonise and reduce that. So focus for net zero by 2030. So we're well advanced there, and we're moving that through the process. So for Delorean, look, it's been a year of strategic reset. We've moved from construction revenues now into annuity-based infrastructure revenues that will return high yields from an EBITDA perspective across a couple of projects. We expect to be in that sort of 10 to 15 mil EBITDA position. So across those projects, we expect to expand out our infrastructure development pipeline, work closely with our project finances and bring in further capital, and then just really drive that earnings growth and profitability. We spoke about the New South Wales project generating over $13 million of revenue. On top of the SA1 project, we expect to be generating well over the $25 million of revenue for a healthy return across the business. So I guess why Delorean? Look, we really represent a unique position in the market. We're the only Australian bioenergy stock, and we're heavily focused around a build, own, operate pipeline that gives long-term, locked-in annuity growth, cash flows as well as returns. So heavily focused on that, and the industry dynamics that are really supporting both the waste and energy sector, especially what we're seeing now, is enabling further renewable gas projects that we've got in the pipeline. So heavily focused on that diversion of organic from landfill, but also on producing renewable natural gas that drives an economic return for the business and the shareholders. So I'd like to thank everybody for listening, and welcome questions.
Great, thanks, Joe. That was a great introduction to the company. So as a reminder for anyone who does have questions, we do have the Q&A box down the bottom. So if you'd like to send them through, just click on that and put them through on the Q&A, and we'll ask them in due course. Joe, with the presentation, I think this, I've learned so much, but I've also got a lot of questions. So maybe if we just start on kind of like just talking about the competitive, I guess the nature around what we're seeing right now. You did say that, you're the only Australian bioenergy stock out there, and it does feel like you've got a strong first mover advantage. Yet the anaerobic technology that you're talking about seems very mature. So can you give us a bit of background as to why it is that other people haven't come into the space, and why you do have this first mover advantage?
Yeah, so look, we've heavily focused on how to commercially align facilities for return, and that's something that has taken quite a long time to work out in the Australian sector, as the energy policy hasn't been clear. So where we've seen the European guys with clear energy policies such as feed-in in tariffs and others, they're paying for waste to be able to generate returns, but it's a government subsidy that underpins that. For us, our focus is the diversion of organics from landfill, getting paid for our waste to be able to build out that pipeline. And that's mainly the advantage that we've got, is that understanding. But equally, the pipeline of projects that we've got, they don't appear overnight. They take years of work and dedication and capital to get to the point where it's ready to be, shovel ready, investable, bankable. That's something that we've spent a lot of time understanding, but also creating a bit of a deflection point in the Australian market to support investment into the pipeline, which is what we've been successful with securing the NAB into Delorean and into our project pipeline.
Okay. So just in terms of the typical customers that you'd have, are you signing more so with commercial companies like QSRs, or is it government, or like how's the contract structure with the companies that you're getting the feed from?
Yeah, so look, we're locking in on every revenue stream. We're looking to lock in long-term contracts. So in terms of gas and liquefied CO2, obviously we heard about SA1 having Origin for the gas and Supergas for the liquefied CO2. Equally, New South Wales has got Brickworks for the gas side. In terms of feedstocks, there's a lot of work that's underpinned by the feedstock, and we've got relationships as well as contracts with large logistics, as well as large producers of the waste as well, that want to have a green benefit of diverting their organic waste from landfill into a facility that generates carbon credits as well as other benefits. So we've been able to lock in contracts, 2-3 year contracts around the feedstock. Councils we're seeing a bit longer than that, more like 4 or 5 years, and that it's a merchant market that we're seeing is increasing year on year based on demand as well as population growth.
Yeah. And I mean, one thing in terms of looking at some of the, I guess, renewables and gas in the past in places like China, is the logistics costs. So how do the logistics costs for the transportation of the waste come through? Is that like paid by the feedstock providers, or is that something that Delorean takes care of?
Yeah, so we typically look after just the gate fee. So we charge for material coming in, but where our sites are located geographically is typically in the place where the waste is generated. So we're
Mm.
shortening logistics. We're being a point of differential point to enable reduce logistics costs across the main logistic carriers of waste. In addition to focused on processing high volumes of organic waste and repurposing for energy as well as nutrients. So where the waste is generated is typically where we build our facilities, and we've reduced that logistics cost that's borne by the third party that's bringing the product to our site.
Right. Okay. I might just switch over channels and ask some of the questions which come through. One which has come through here is if you can provide a bit more details on the Opal JV, especially the timelines.
Yeah, so the Opal JV, we're moving through concept stage into development approval and then into construction. We expect to move through concept in the coming months and then into the development approval that will be typically about a nine to 12 month time frame to get the facility to the point where we can get it shovel ready effectively. So we expect from where we are now, next couple of months, we'll move into DA. Once we move into DA, we're 9 to 12 months, and then we're in construction.
Perfect. Yeah. Just coming back to like talking about maybe some of the capital structure of the company, you were saying that you do have some good taps into I guess government subsidies and also probably seeing some debt come in. So if we think about I guess the debt to equity capital structure, what in your view is kind of like the optimal structure that you'd like to see for the plants?
Yeah, so look, we focus very much on a blended finance approach. So we've secured over double the market cap of the business in grants, and we've also secured some debt to into the project. So we see this as a probably a two-phase debt approach. First phase is around equipment and asset finance that probably looks like more like a 30 to 40% LVR that then increases to about 70% once we move into operation as a total asset debt. But we see also the value of the facilities lifting at the same time that effectively enables us to roll out what would be probably seen as a property portfolio approach to a national waste infrastructure that's underpinned by those long-term annuity-based contracts. So that's our focus: blended finance, blending grants with equity. We've got corporate debt that we will move into the projects, and we'll continue to grow out the pipeline to maintain a healthy balance sheet with a widespread delivery of assets and infrastructure.
And just in terms of the debt financing that you are seeing at this point in time, are you getting more favorable rates given that it is kind of like green financing? And maybe if you just talk about the outlook of how you see the cost of capital going forward.
Yeah, look, there's a lot of green banks out there that are heavily supporting this type of investment. When we look at the New South Wales project, over 50%, or sorry, just under 50% of the project is supplied by grants that has an equity carry through in the total infrastructure that enables further capital to be brought in, especially from a debt and equity perspective. So a lot of interest from the likes of green bonds, from the big four with their green products as well. We are seeing favorable rates, certainly lower than development debt as what we've currently got, more into that operation side that enables a lower cost of total asset infrastructure debt as opposed to high cost development debt.
And when we think about the plants going forward, I mean, you've done quite a few now, just in terms of OpEx and CapEx, and I guess efficiencies of builds and what you learn from the old plants into the new ones. You mentioned a 15% IRR previously. Is that something that you think could potentially see better returns as you become more mature as a business and well versed in terms of the operations?
Yeah, definitely. I mean, we've got a you know we've taken a conservative approach to highlighting an IRR. We've got a lot of optimization and pathways to increase that significantly that will be done through the operation phase. So that's our focus at the minute, is the construction into operation and then optimization to capture all of the revenue streams. We touched on biofertilizer. There's a massive market, especially with the current climate around urea and China sort of maintaining their stocks there. Digestate as a biofertilizer will be able to supply organic fertilizer into the market that will have a big impact once we build the infrastructure. So a lot of optimization to increase IRRs and a lot of work that we can do to really drive shareholder return.
Yeah, exciting. And just when we think about that IRR, does that also take into consideration say government subsidies and carbon credits, or how should we think about what that number represents?
Yeah, it's a good question. Yeah, look, we look at it as a project IRR, so unlevered, but with the subsidies. As we start to lever with lower cost debt, we start to increase our returns as well. And it's about shaping the debt profile to the infrastructure that enables a portfolio approach, because we're not here to build one project or two projects. We're here to build the next 10, 20, 50 projects. So we're looking at this of how can we manage the balance sheet, the debt position, but then leverage that as we see increased value across our infrastructure portfolio to really drive multiple assets that we've been working on in the development wise for the past few years that are shovel ready to move into build. So that's why it's an exciting time for Delorean. We're at the stage of implementation with SA1 coming on stream this year. We've got a whole pipeline that is following that through that will just replicate multiple returns across the business as we bolt another project on.
Perfect. There's a few more questions which have come through here. One is, let's see. So congratulations on Horsley Park announcement. What were the main reasons for the success after the December decision from Brickworks?
Yeah, so look, this project was more about how we focus the structure of the contract, as well as enable the pathway to move forward that commercially works by both organizations. So there's a lot of time spent in terms of working the best commercial arrangement out there to drive success in the project. Previously, it was a 50-50 JV, as we highlighted. That moved into 100% ownership that enabled Delorean to factor the grants into the asset as well. And it's a cleaner stream, as Delorean's core focus is delivering renewable energy assets, bioenergy assets, and Brickworks obviously producing bricks. So how we can support them reduce their Scope 1 emissions has been factored into this to give the best pathway forward, which we've now achieved.
Okay. And just in terms of the Horsley Park, just in terms of, I guess, the capital required in order to fund that, can you provide us a bit of color as to your thoughts around that?
Yeah, so look, obviously, with the announcements of the grants, that's enabled that to be, put out into the public. We've been doing a lot of work in the background around the equity and debt requirements, and we're very close to getting something out shortly around what that looks like. In addition, we've got other sources of funds that come in, or equity that comes in to support the R&D work that we've been doing across the business, in addition to other sources of funds that reduce that equity requirement and looks at a slightly larger debt position because we're able to factor the grants into that position as well. So that's how we've been focused on delivering that project.
Yeah. Okay. Makes sense. Just as a follow-up, to this, it seems like a good time to advertise in the AFR. Is there any plans for that? That's one of the questions.
Uh, Look, we get a lot of interest and support from the journalists just around the work that we're doing.
Mm.
We tried not to get too much into paid marketing to a certain point, noting that there's a lot of interest in fuel and certainly renewable fuel. Biomethane as a direct replacement to fossil fuel is a key contributor. So I think there has been a lot of interest. I think we've seen some articles in the Australian and others around some of the work that we've done. So we're very focused on yeah. I think we recognise we're a small company working with large billion-dollar businesses supporting their pathway to decarbonise. And SA1 is a project in its own right, delivering gas into the network, and New South Wales is obviously delivering gas behind the meter to brickwork. So we're really covering all of the bases here to drive what that looks like. But yeah, look, I think hopefully the AFR can pick it up and support the pathway that we've been going down the last 12 years.
There's a few questions here related to, I guess, cash flow of the business and profitability. So I'm not sure if, on a blended basis, you're able to kind of like give us a bit of your thoughts as to, when cash flows could be a bit more, I guess, positive on a more sustainable basis, or I mean, if that's the right way to think about it, or maybe the unit economics of one plant, and as you scale going forward, how we should think about the cash flows for the business.
Yeah, so look, in terms of short term, it's about this transition that we sort of spoke about. So converting equity debt into assets. So our focus is we've not focused on delivering third-party projects for third parties in the construction revenue side. We've focused more on annuity-based revenues that will come from feedstock, gas sales, liquefied CO2, and others. So the transition for us is to reduce our revenue, if you like, which in turn, does have an impact on cash flow. But we've put in place the ability to convert that debt into asset, utilizing the team. So we are going from a previous profitable business into deploying our own assets and focusing our in-house team on delivering that initiative. In addition, because a lot of the work that we're doing has an element of R&D to it, first of its kind in South Australia, first of its kind in New South Wales. We just crept under the 20 mil of revenue last year that will enable a cashback R&D that we expect to be announcing in the coming months as well. So we do have other sources of cash flow coming into the business, as well as the infrastructure that will start to be switched on with SA1 shortly, and our operations project, Yarra Valley Water, that's in full operations. So we have different parts of the divisions of the business that is cash flow positive, that is servicing our current client base from development operations, and as we move SA1 into operations, we'll start to see further cash flows. In addition to, while still rolling out that infrastructure rollout. So New South Wales, VIC1 will be the next focus for us. And again, that will be converting and drawing down on debt drawing down on the grants as well as debt into asset infrastructure. So increasing that balance sheet at the same time, and then starting to bring those operational revenues in.
There's another question which has come through on just the timelines around the new project in Horsley Park. How long will it take before the income comes in after the construction starts? So, I mean, would that be similar timeline to the ones that you were showed previously, or are there any other factors to take into consideration?
No, so Project's sure ready to go. We've hit FID. We'll just hit financial close, which we expect to achieve in the next 6 to 8 weeks. We're heavily focused on moving that project into construction, which has got a 21-month construction time. There's quite a lot of civils on site, which we've got to jump on. Hopefully, in that sort of June, July timeframe is when we're expecting. In terms of ramp up, we've got as soon as we can take waste, we'll be processing waste, and on the other side, Brickworks is ready to take the gas as soon as we connect the pipe. So we won't have any impacts from any grid connections or anything outside of that could impact or delay our project reaching not just financial close but operational COD.
Perfect. One more is just in terms of SA1, how's that coming along? When will it start producing income?
Yeah, so we expect to start generating revenue from effectively July, August this year, where we're processing waste, and then we'll start to generate revenues from both gas and CO2 towards the back end of this year as well. So expect to start generating revenue straight away. We will ramp the site up as quick as we can as we biologically seed the process and aim for 100%. We've brought on the general manager for that site, and it's got a waste background that will update on our LinkedIn shortly. So a lot of great positive steps there towards generating income, revenue, and moving into profitability. And we expect by the end of the year that we'll be profitably running that facility.
Great. Maybe just taking a step back. I mean, we're building facilities across the country at this point in time. Are you able to just give us a bit of color as to what you think the TAM is, or the total addressable market? And I guess it's early stages at this point in time, but if we were to talk 10, 20 years out, where you think this could possibly get to?
Yeah, look, for us, it's we know there's over 50 million tons of organic waste and ag residues in the market. The facilities that we're building are, ranging from like 50,000 tons to 120,000 tons. So for us, the amount of facilities we can build is sort of endless. And then on the gas side, there's over 1,000 petajoules that is consumed in the gas side of things. I think we know gas isn't going away, especially in that sort of that hard to abate industrial sector, paper, brick, glass, where gas is needed, food as well. So we feel that there's an endless demand for gas currently, as well as and a shortage of supply, which is what we're focused on, as well as a feedstock to support that. That if we put it into landfill or we put it into compost, in a lot of cases we're not capturing what that energy is. So for us, capturing that energy, seeing the reduction in Scope 1 emissions, offsetting fossil fuel has a clear benefit that has been well supported both federally and also state, from New South Wales one as a prime example.
Great. As a reminder, if you do have questions online, just send them through. I've only got a couple more from here, so we might just finish it after that if there's no further questions. I think from my end, really just to understand a few things. So firstly, competition landscape. Are you seeing any competitors coming into the field now that you're starting to do this and it looks like a great business?
Yeah, look, there's so we feel we've created a deflection point with the SA1 project. Obviously, a lot of overseas suppliers looking at how they can deliver into the market. There's quite a few developers as well that have been developing projects, similar projects, ag residues, as well as other projects. There's been a couple of recent announcements on other projects supported by sort of large institutions or infrastructure money as well. So it's great to see that support there. I think we fully back that. Delorean, we've been operating this for the last 12 years. So we fully understand the Australian market. And in terms of delivering projects, understanding how to deliver projects in the Australian market has got a bit of a niche when we're looking at renewable natural gas as well as that. So we feel we're well ahead of our sort of the competitive landscape, and we're really driving the sector forward with our track record, which is why people like Opal, Brickworks, and others are leaning on us to support them in their net zero journey. And you know, look, there's a lot of good announcements to follow in the coming months, stroke years.
Yeah, I do agree that that first mover advantage is a very strong competitive advantage. And the logos that you've signed on are very illustrative of that. So um, last two is just in terms of when we think about the company over the next 6 to 12 months, what kind of potential catalysts or risks should we be aware of?
Yeah, look, so Catalyst's obviously the SA1 project coming on stream. You know, we're heavily focused on getting that up to 100%. You know, obviously we've built multiple projects now, so this isn't new for us, ramping a facility up. So we've de-risked it as much as possible, bringing waste in. It is the first of its kind in South Australia, but the technology is mature around renewable natural gas and separating out the CO2 from the biomethane. So we've de-risked it from that element as well, and then put it into the grid. And just understanding how the gas flows into the grid and the regulatory requirements there is probably the new part. Look, the opportunity for us is on the back of the learnings of delivering multiple projects and then SA1 and others. It's really a catalyst for supporting that large industrial market, as well as building greenfield sites nationally that supports that waste market. We've got great relationships around offtakes. We're seeing a lot of demand for it. So it's about shaping the requirements to support a de-risked approach, in addition to seeing the likes of NAB and other banks, playing a lot of interest in how they can support our growth and the next wave of infrastructure that we're building.
Perfect. Okay. Well, we're almost 45 minutes in to this call, so I better let you go. But I think that's actually been a really great call, very informative. So thank you, Joe. Thank you so much for taking the time today to give us your updates, and congratulations once again on Pulse Park.
Yeah, thank you. Really appreciate the invite and great questions, Wayne, and thank you for our shareholders as well.
Wonderful. Okay, we'll leave it there. Take care, everyone.
Cheers.